Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around about 10:30, consolidation, profit booking, range bound trade continues on the street, like what we've seen for the past maybe about 2 or 3 odd weeks. But the bottom could be anywhere near where we are trading right now, plus minus 50 to 100 points respectively on the Nifty and of course on the Sensex. Before I go any further, let me give you certain levels on Sensex, Nifty, Nifty Bank, Rupee dollar equation and crude oil. Sensex down about 80 odd points, 81,170 is the level on Sensex. Nifty down about 60 odd points, 24,790 is the level on Nifty Spot. Bank Nifty up 40 odd points, 52,135 is the level on Bank Nifty or Nifty Bank. And on Rupee dollar equation, pressure continues on the Rupee and we have actually surpassed 84 for quite some time. Currently, for every dollar, the Rupee is at about 84.07 with a weakness of 0.005 paise. Likely possibility that this weakness on the Rupee can be extended forward, keeping in mind the global news flows in terms of economy, as in, of course, keeping in mind the uncertainty as far as the Middle East situation is concerned. On the crude oil front, after a fall that we've seen, there has been a marginal uptick on both Brent and NYMEX. Brent is trading at about $73.48 to a barrel, and NYMEX is trading at about $69.70 to a barrel. So, firstly, on the crude oil and rupee dollar equation, well, crude oil, like we all know, for the past many months, the driving factor for crude oil prices is going to be the situation in the Middle East and events that unfold over there, rather than any large demand supply indicators. At least in the near term, the news flows and events unfolding in the Middle East will drive the crude oil prices. Hope that there is no large jump in the crude oil prices, which may possibly have its impact on global markets, emerging markets, developed markets, etc., etc. So currently, expect near about trades for Brent and NYMEX, not much of jump up. And of course, the news flows from OPEC plus countries will also have its impact as far as crude oil prices are concerned. On the rupee dollar equation, friends, I think our view over the last couple of months has been that 84 would be a level which will be protected with dollar supply coming into the markets from banks as well as from RBI. But given the strength in the dollar against emerging market currencies, one can see a little bit of more weakness on the rupee towards 84.10, 84.15. And then, of course, situation with respect to dollar supply in the markets from RBI and banks can possibly stall the weakness in the rupee. So that's the outlook as far as rupee dollar and crude oil is concerned. Coming on to the markets, friends, I think 3 weeks have gone by of profit booking, consolidation, sell side figures from FIs actually for this month itself has reached an all-time high. It has actually surpassed the March 2020 COVID time sell side figure, and there is most likely that this sell side figure can go up, which may possibly lead to a little bit of more profit booking consolidation in the markets. But let me highlight one point over here. While we speak about FI sell side figure, I think we also have to take into consideration that that sell side figure has actually been met with the buy side figure with domestic institutional investors. Now look at the situation, what happened in March 2020 during COVID time. I think the sell side figure, if I'm not wrong, and I stand to be corrected, during March 2020 COVID period, 65,800 crores worth of sell side number was there. And we saw what levels the markets went to on the lower side. While currently in the present situation for this month itself, the FI sell side figure, again, I stand to be corrected if I'm wrong, approximately 80,200 crores they have sold in this month itself, up to this month, and this figure can possibly go up also. Despite of this kind of a sell side figure from FIs at the record level, we have corrected marginally, I would say, in terms of percentage on Sensex and Nifty. Will there be more pressure? Well, if the numbers increase on the sell side from FIs, of course it will. But the point that I'm trying to drive home is that domestic institutional investors are prepared to withstand the sell side number from the FIs, and that has actually protected the market from actually given the kind of correction what we've seen in March 2020 compared to what we are witnessing right now. So I think lower levels on the Nifty spot, like we always give two levels, 24,500 to 24,700. These are the broad range on the lower side. And on the higher side, 24,900 to 25,200. That's going to be the broad range on the higher side. So these are the two levels, both on the lower side and the higher side, where we expect the market to consolidate it a little bit more before we see any kind of festivities coming into the market on fallback of Diwali, etc. One more aspect that I would like to highlight is that this week is going to see large IPOs opened up. And that's going to attract a lot of liquidity towards the IPO market, that is primary market. There could be a possibility that some sell side figure from secondary market could also be elevated because of the kind of fresh paper that is coming in, and subscription towards that would eventually lead to some kind of liquidity coming out from secondary market and going towards primary market. But I don't think it's going to be alarming because there is enough liquidity like we've seen in the past. Q2 earnings, which is of course started about 2 weeks back. Not much has come up till now, but whatever we've seen, there has been slight disappointment in maybe some companies' Q2 numbers, and in some there has been a little bit of excitement. But this week and the week onwards coming, you will see a lot of earnings also unfold, and possibly whatever little bit of dark spots that we've seen in the opening Q2 earnings season can possibly be overshadowed by some kind of good numbers, in case if there are any that we would be seeing in the next couple of weeks. So broadly speaking, friends, I think the more time we spend this consolidation, we have always maintained this, that the longer period we spend in consolidation time, the longer range bound movement we have, the stronger is going to be the durable rally that we will see once we are able to take off the resistance level on the higher side. And this is what we've seen in the past history also. Whenever we spend a long period of consolidation, recovery and a breakout about those resistance level has led to making us a new all-time high. So possibly we again will follow that kind of a pattern. This is assuming that the sell side figure is going to be met with buy side figure from domestic institutional investors, that is DIIs. So don't expect large moves on the market, that is Sensex and Nifty. But given the fact that we are in the middle of or just beginning of Q2 earnings, I think stock specific moves will definitely be something that will be in the spotlight, in case if sectorially and company specific numbers are good, then I think that sector and that particular company will see a lot of excitement given the kind of situation that we are into currently. But whether this is a buyer's market, well, we for one definitely think so from a long-term point of view. I think these kind of corrections, we have also always maintained that this is a time to create portfolios from a durable long-term period. We have two investment ideas for you, friend. Both are broadly from the mid-cap universe. One is a mid-cap cement manufacturing company called Birla Corporation, Birla Corp as we know it. A mid-sized cement company with great production capacity, and the demand for cement is likely to go up given the kind of infrastructure activities that we have seen pan-India by central government and also by the state government. So this is one company, and of course monsoon is now past, so infrastructure construction activity is likely to pick up at a larger space. So Birla Corp is the first investment idea. Second one is from the IT pack, a small to mid-sized company. We would have spoken about this company earlier also, that is KPIT Technologies. This is one company that we have seen as a very strong investment idea with respect to the earnings visibility that the company has delivered over the last many quarters and financial years that we've seen. And assuming that this run rate is likely to better, earnings are likely to improve, we can see elevated levels. Price corrections like we've seen in the markets are great opportunities to create wealth by diverting your investment into strong fundamental companies. Mind you friends, these two investment ideas are from a long-term point of view. These are not short-term BTST. You need to have at least 12, 16, 18 months time horizon. Given the consolidation mood in the market, a most prudent approach to invest in these kind of strong fundamental stocks would be start at current levels with a small amount, and as and when you get dips, go on increasing those small amounts into a larger investment and create a strong portfolio. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of your health.